Greetings, members, one and all of the Salivation Nation. Is the Federal Reserve hiding inflation from us? Let's explore. You may remember a little while ago I posted a video about how the Federal Reserve has changed some of its reporting methods for the M1 and M2 money supply. They stopped reporting it on a weekly basis and are doing it on a monthly basis. And, of course, that makes you wonder why they are doing that. Well, some people are beginning to wonder, especially with some of the latest numbers and concerns about inflation. Silver Honda sent me an article here talking about this particular situation and how it's tied in here to the money supply and inflation. And there's a real fear here, and it's very concerning and alarming. This article is from Seeking Alpha, and the subheadline here wonders if hyperinflation is inevitable. The Federal Reserve has stopped reporting its money supply data as often as money supply has significantly increased, making inflation a major threat. There was talk about how the Federal Reserve has stopped recording the increase in the M1 and M2 money supply, which has been a major crime against the American people, according to Michael Cohen. M1 money supply includes those monies that are very liquid, such as cash, checkable demand deposits, and traveler's checks. M2 money supply is less liquid in nature and includes all of the M1 supply, plus savings and time deposits, certificates of deposits, and money market funds. As the government pumps more money into the economy, it makes your money worth less and less. And by the way, most of that money has been mostly pumped into the market. In other words, the stock market and into derivatives, and also around the world. And more than 60% of nations transact in dollars. The M1 supply has increased by 450% in 1 year, and yet basically the Federal Reserve is saying that inflation is going to be relatively minor and short-lived. The M2 money supply is up 30% in the past year. Now, Michael Cohen said that a financial crisis is coming and fears that they stopped reporting the money supply because they believe they will need to produce even more money to pump into the economy. If they do that, inflation is bound to hit hard. Well, we already know inflation is here. It's really been here for quite some time. In fact, by its very design, the Federal Reserve, a bank, prints these debt instruments known as dollars. And they also interject them into the economy in such a way that they are being utilized and transacted from stimulus and bailouts and the like, and they've been doing that for quite some time. But the velocity of the money supply has been at least on a manageable pace, which is why inflation has been relatively in check. But by its very design and nature, it's at about 2% per year on their target, based off the Consumer Price Index. Of course, that only measures some aspects of the economy, as those are done through each of the districts, of the 12 districts of the Federal Reserve banks around the country. Central banks can be a threat, and they are, as far as how this is occurring, by interjecting this money. It's not just the United States. Other nations are doing it as well, including the European central banks. They can increase the money supply by 500%, and it won't inflect inflation, is what they're saying, and it won't debase currencies. But most of us know that that's really a lie. You can't print money and not have debasement of currency and inflation. Basic economics states that the fact that the government's stopping public access to money supply information is extremely worrying. Well, the retort to that will be, well, they can just do it less often, and you will see the numbers when they come out, probably monthly. But by the time that next month rolls around, things could go in a bad way. And by the time those numbers come out, we could see hyperinflation occur that quickly. It could snowball very quickly, and that's the fear, I think, that is part of what is concerning here. Now, the dollar being the top dog in the world's reserve currencies, it's less likely. It is this most stable. There is some stability with the dollar yet, and that's based off of our trust in fiat. That's right, a government decree saying that, hey, you can trust me, I am the dollar. And we all do to a degree, but that trust is starting to show some cracks, I believe. And I think that's what has been noted recently with some of the current concerns economically and why gold and silver have gone up. And as you can see here, we have some gold and silver that you're looking at right here. These are metals that have been money for thousands of years, and they are inflation proof. That's right. And that's why one of the reasons why I believe there's been some excitement in the gold and silver markets. People are accumulating these metals to protect themselves, and hence why we're seeing very high premiums right now on gold and silver. So they are, when central banks do this, such as print these currencies, it's like a hidden tax, and they're looting the economy. They're buying bonds, corporate debt, stocks, and other assets, which makes billionaires wealthier, and essentially it destroys the other classes out there, the working class. If you hold dollars, one can make a pretty cogent argument for at least getting out of them to some degree. And how do we do that? I mean, we can't completely be independent from the dollar. There's no way that can happen. That's not something I would stress. But we can become more independent by accumulating gold and silver, and doing so in such a way, utilizing a method called smart dollar cost averaging, which essentially, as I've covered in a prior video, that means buying more gold and silver when the prices are low and less when the prices are high, all within the confines of your budget and with what you are comfortable and with what you can understand with precious metals. In other words, if you're going to be paying a very high premium over spot price, expect that you may lose that premium at the time of selling that metal. If some of the predictions that some people are making don't come true. So we have this 10-year note that is starting to show some inflationary tendencies with the bond, 10-year bond yield. And that's something to take into account too. You have the dollar index and you have bond yields. The rate right now is 1.66 and has reached 1.77 recently. The market is telling us in the 10-year note, which has risen from 0.51 in August of 2020 to 1.66 today, that inflation is coming. And that's how that can be interpreted. But there's a lot more that I think that needs to be kind of looked at as well. But that is just one measure. And of course, we've got the Consumer Price Index calculating using a method used back in 1980 was significantly higher than what the government says it is now. Inflation under the 1980 rate is at 6%, which is far higher than what the government says it is using with a newer formula. So statistics can be changed to reflect certain things. I think really what it comes down to is look at the things that you're buying on a regular basis: milk, bread, gasoline, lumber if you're in the construction industry. There's all different measures and things that we're seeing. Copper has gone up double the price. It's a base metal. That tells us something. And if you see that in a consistent level, then there's some real reason to be concerned. And so that's why utilizing what's known as these shadow statistics and some of these numbers, when we see what's happening in the real world, those are real genuine concerns. And so when the government doesn't report as often as it had in the past, with not really much reason that they're giving. Maybe they're hiding inflation from us. But in reality, it should be before us based off of what we're seeing in these others. Housing is another one that's gone up like crazy. Housing is starting to rise dramatically as well. There's all types of things like that are available in plain sight. Now, does that mean that the economy is going to crash tomorrow? Does that mean the dollar is going to fail tomorrow? Likely not for quite some time. There's a lot of resiliency there because we are the top dog in the bunch of other currencies. And the faith in the dollar is real, and it's very much why the dollar is money. Not just currency, but money. More on that in another video. But notwithstanding, holding gold and silver will protect you from an ever devaluing dollar, because in reality, fiat currencies always die. Gold and silver never die. Just like Cobra Kai, gold and silver will never die. So we'll see how it plays out. But I think it's quite interesting, and this article kind of is somewhat of an eye-opener, although it's a bit alarmist. And that's something that I don't want to be, because people should not be panicking under any circumstance. I think it's a matter of being logical. It's a matter of being smart and understanding where things are in relation to the economy, with relation to debt, but also the resiliency of our system. We have been through some trying times in the United States with different policies that have been enacted, especially when you compare it to the Great Depression era. In other words, under FDR and the New Deal. Even court packing, there's an attempt for court packing that occurred back then. We're reliving some of those times. They're talking about it now. And though that's kind of unrelated to this, there is a lot of liquidity that was put into the entire system with the New Deal, a lot of government expenditures. And it's not good. But we will hold strong with our gold and silver, even if there's another executive order issued like was done during the FDR administration. They're not going to get our gold. They're not going to get our silver. We're going to hold on to it. And that's the bottom line, because we say so. And so I would encourage you to keep pressing on and not to panic, but also makes you wonder about the government. It makes you wonder about this private institution known as the Federal Reserve and what they're hiding from us with some of this reporting. Thanks again to Silver Honda for sharing this information with me. Let me know what your thoughts are about the Federal Reserve and what they're hiding. What are they hiding from us? A multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.